Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. Quick update on where we are at with the trading room before we move on to the markets. Here are where we're at for the stocks. Anyway, this shows some of the stuff we did last week. You can see right here, 11 or starting at 812. 811, 812. These are most of what we did over last week and into this week. Just a few so far this week. AVGO, FAS, and GA I got into this week on Monday, and I thought, well, I think we'll be okay coming into Tuesday because we usually are. An options expiration week, Monday into Tuesday is usually all right, and then of course we were met by that big gap down, so I got kind of burned on that. But we got right out of them here at the beginning of the day, called it good. So I got out of these. Right here I'm into TLT and ABC, and now we'll see how those turn out by the time tomorrow comes through. But anyway, point being, we haven't taken a whole lot this week. There really hasn't been much to do. We've been flat. So when things move sideways, I don't have a lot of trading to be done. If you guys want to look back, you can see what we did the week before and even the week before that. So you can see where we've caught up. Anyway, to begin the week, just a couple, 2-3 trades so far, and down just a little bit on those trades over to the futures, and you can see where we're at for the week itself, starting with the 15th. Here, these are all the futures trades we've done so far this week. And you can see I'm just really, guys, listen, when the market moves sideways, I don't shoot for home runs. I don't even try to hit 10-point, 20-point gainers. I mean, I'm not shooting for that. That was last week. You know, last week we did that kind of stuff. We had great moves last week. Look at this, 25 points, whatever. See, that was easier last week. We're not getting that this week, and I'm not even trying. I stay pretty conservative in the room when it comes to days like this, and we're pulling 2 points and mostly 1 point. Look, I'm just looking for 1-point hits right here. But by the end of the day, they really start to add up. You can see how all these little $50 hits can really add up to your portfolio. I've got one 4-point move so far this week, and that's it. Outside of that, just a bunch of 1-point and 2-point hits. As long as you know what the setups are and when to get in, when to get out, you're doing great. So 1,100 so far, nothing special, but nothing bad either. At least we're still making money. Overall, week after week, we're still doing very well in the trading room. If you have time, you got to try it out. Come sit in for a day. I'm not going to charge you. Just tell me, hey, listen, I've got Friday off or Wednesday off or whatever. Can I sit in for a day? Yeah, come sit in for a day. See what you think. If you've got time to trade during the course of a week, remember that trading is a very lonely business. And so it's nice to have a community of traders to talk to. And I love the people in our trading room. They're fantastic. Super easy to get along with. They're all really nice. We're laid back. I have a lot of fun. During the course of a day, you know, it doesn't have to be all neckties and whatnot. We're just a community. We're going to have a good time and make a little money in the meantime. So anyway, doing all right, but basically just picking and choosing here. Whatever the market gives me, I take. I'm not looking for the big hitter yet. We're going to get something, I think, coming in later in the week, and you need to be prepared for that. So back to the markets we go. So let's look quick at the Dow. Back into the markets, and you can see that we had this area here, overhead resistance. We've come down. We've been plowing our way sideways and then grinding our way upwards after we broke these levels. Gave you these, I think, last week for my overhead levels of go long, and it's paid off in spades as we've moved a whopping, 100, 200 points or something ridiculous like that. Hasn't really moved a whole lot, okay? So, yes, being facetious here. Next levels, though, are pretty simple for me. Now, there's a line coming down, a trend line. I don't have it drawn in on this chart, but it really intersects right now around that 11.6 mark. So above 11.5, yeah, I don't mind that for a long, but I would really actually want to keep you guys a little bit more on the conservative side and say anything above 11.6, that would be my next area to be looking at for your long positions. I do like more speculative trades below 11.3. I think that has some opportunity to it, especially if maybe we finished, for you Ellioticians out there, I think we finished wave maybe 3 down here. This could all be working on A, B, C for 4, whatever. But if 4 is done and 5 is yet to come, that means we're going to break these lows down here. And I'm looking for entries such as below 11,300, I think is a good spot to be looking at. The more conservative need to wait till it breaks the 11 250 mark, and then really below 11,100 is my more favorite spot to be looking at. And we'll look at some more here on the daily. Back above us, 11.5, yeah, but I really like 11.6. Back above 11,600. Okay, we can try to make this into an inverse head and shoulders as well, and if that's by some means legit, then this is going to hold quite a bit of move. This is like up for a 900 point move or something ridiculous like that. I don't know if that's all that legit at this point, but certainly something we need to keep on our technical charts and watch carefully. 11.6, guys, above 11.6, at least back into 11.7, 11.8, 11.9 areas, each 100 points after that. I always look at these levels as we push higher, but above 11.6, I really do like the 11.8 to 11.900 mark. As we look at the daily on the Dow, you can see we've had this little, I call it the fence post down here. We're down, then up, and down, then up, and finally squeeze our way upwards. Above 11.6, 11.8 to 11.9 is going to put you right back into these moving averages, and I love this area up here for overhead resistance. So 11.550 to 11.600, depending on how long it takes us to get there, or to break those areas, are definitely your areas to be watching to the upside if you're looking for the long trade. But as we enter 11.8 to 11.9, you need to be cautious. You can take profits, you can move stops up. I don't care how you manage it, but manage it. Be very careful up here in this area as we proceed to the upside, because the bulls have certainly not taken over by any means with what they've done so far. Moving on to the NASDAQ on the 60-minute. Now, the line that runs down here to the trend line is actually puts this price action above it. It's actually above that line, and it's sitting on it, and it's sitting on it, and it's resting on it. So my line here, and it has been for a while, is still 2225. 2220 was one more aggressive entry to the long side, but 2225 is by far the more conservative area to be looking for a long play, and I do like the NASDAQ long. I'm not a big shorter of the NASDAQ, but I love this thing to the long side, even though it's been kind of, actually, quite honestly, kind of the lagger lately. It has not been showing the strength that it typically does. But if the bulls can get up and get going, believe me, the NASDAQ will catch up, and it'll catch up quickly. And you'll have one of those days where it'll be up 2%, and the rest of the markets will be up 1.25, something like that. Has a tendency to do that if the bulls can get up and get going. So above 2225 is your long opportunity on the NASDAQ, coming back into 2300. Love this area right here. Lots of good, strong overhead resistance sitting up here, so if you can get it back into that area, moving stops, taking profits, whatever your choice is, but that's where I'd be looking if we can get up and over this area. Now, the fact that we've actually been in this kind of a pullback, you got to view it as that. Just nothing more than a bull pullback at this point. We had a big surge to the downside, looked impulsive. I thought for a second maybe this is the start of wave 5 down. Still could be, but really overall bigger picture, guys, love this as a bull pullback until otherwise proven. Below 2150, now maybe we've got something else going on. So watch these overhead levels. These are definitely the places to be looking on. The daily NASDAQ, you can see us coming up and into some of these overhead areas right here, but the levels have not changed for me. I love it above 2225, and yeah, there might be a tiny bit of overhead resistance sitting up here. I'm not exactly sure. Anyway, loving this area as well. I don't know if we'll get quite as high as that, but if we do, this is definitely something you need to have marked on your charts. So this 2275, let's call it 2275 to 2285 area, will certainly be good, strong overhead resistance. Also loving the 2300. I think it's possible to maybe even plow our way through what we're seeing over here on the daily before maybe hitting some of that and then pulling back really quick. That's actually what I would totally expect if and when we could get up into that area by the NASDAQ. Let's watch that closely. From the weekly, you can see last week we got a lot of these hammerish type candles on the weeklies. This one here going nowhere. Look, 12 points for the entire week. Woo-hoo. Not much to talk about. So after 2 days, not a lot of movement. Keep in mind, this is a weekly candle, so we've got all week to figure it out. And let me give you yet one more overhead resistance area to watch, and that is 2246. Now, it doesn't matter where we go during the week. It matters where we close. So if we plow up through that, it's not a big deal. It depends on where we finish by the time the week is over. You can see this big consolidation in here. NASDAQ doing a beautiful job of holding it. Lost it last week, but I always give the bulls or the bears, depending on which side loses ground, a chance to regain that over the next candle. In this case, the candle is a week long, so we'll see where they can close it by the time we finish Friday. SPX, 60 minutes, same thing. Moving up into overhead, kind of resistance. This area is actually about 1214 and pulling back ever so slightly. I've got some really good overhead resistance sitting right around 1210 to 1215, so I would caution you with that area to the upside. Potential longs, yeah, 1205, but you don't have a lot of room to play with that. You can play it into 1210 if you'd like, but I'd really rather you be a little bit more on the conservative side. If we get a break of 1215, I think there's still room to roam, and that could be upwards of 1240, 1260 area by the time we finish that move. But wait for that 1215 to 1220 to be broken before you jump into that. Anything back below about 1180 maybe gives you a good shot at an intraday short. Take a couple points there, with of course 1160ish or so probably being the more conservative short area for me as well, especially if we're 1, 2, 3, ABC type 4, and now 5 is yet to come. That 1160 looks really tasty as well for your shorting opportunity. It's not a big deal. If it is going to be a wave 5 down, we will break 1100, so even if you get in at 1160, you're still good for 60, 70, 80 potential points to the downside. Not a bad trade. To the upside, though, that 1220, remember 1240, which is going to coincide with the 20-day moving average, and 1260 hanging out right above us. VIX, same old, holding on very, very nicely up here in the 32 range. Been very, very strong so far. Now it's down 9.5% for the week, so yeah, it's a lot. But look at it bigger picture. I mean, well above the 1920-ish range that I call complacency, if you will, within the market. So still doing a very, very nice job up here. Another thing to look at is the VXX, and this was something I was trading for a while in our trading room, and this was one where we were using it as a hedge. So as the markets were going up, I was starting to collect it down here, and we managed to get a nice cost basis in the room of about 22. And then I just sold it, I don't remember, last week for 32 or something like that. Anyway, point being, it's still on its way up. This is a great, great hedge if you want something to use while the markets go up. This, will of course pull back. As the market goes down, this then should go up, and it's really poised in here. This looks like a really nice 1, 2, 3, and if I broke it down into even a tighter group, let's go down and see if we can't find it on a 60-minute chart. Let me pull up the VXX really quick for you guys and show you. On a VXX, 1, 2, 3, this looks like some sort of a consolidation potential 4, like a triangle. Triangles are very popular in a 4-wave, and if this turns out to be true, breaks over 35 would be a really nice trade long in the VXX. That should mean more downward pressure to the market as well. Let me just say, as downward pressure comes into the market, the VXX should rise. I don't believe the VXX controls anything. So as the markets push down, the VXX would go up. Breaks of 35, I think, would confirm maybe a little bit more bearish action coming into the markets. This should make for a pretty decent trade to the long side. Certainly something you should have on your charts. Love the little triangle we're getting put into. So breaks below 31 negates the wave 4, if you will. It could be just a little bit longer anyway. It doesn't matter. The point would be a better short trade on the VXX would then be below 31. Okay, so moving back to the VIX. We've got the VIX. Let's go into FAS. Love this thing up and over 1550. 1550 long on the FAS. If we can find a little bit more support down here and grunt our way to the upside, you can see the bulls have not been very aggressive. Last 2 days, I've been talking about this in the room as well, and you can see that from about $14.50 to $15, we can run straight sideways from last week, and where have we gone? Nowhere. Bad. It's tough trading. Very tough trading when things are moving sideways like this. So, let's wait. I'm fine with that. Below 1354 short, above 1554 long. I think that gives you a good opportunity to play it. Right here, things are still fine. Nice big hammer candle. Not much for confirmation afterwards, but it is still hanging out up here, and as long as it hangs out up here, maybe the bulls got a shot. At least to come back, fill the gap, something. Above 1550 back to 17, $1.50, not too bad. Any further runs to the upside? 19 to 1950 on that trade. FAZ, you can see putting in a very nice channel down here. Now we have had good luck as well on shorting at the tops of these things and running them to the downside. If it happens to break this, anything above 60 bucks, I like FAZ to the long side. That would mean downwards pressure on FAS, but to the upside, above 60 bucks on FAZ, I love it to the long side. I think 64, 65, even higher is very, very possible within FAZ at that point. Further breaks to the downside, anything below 55, there's a chance we could reach, well, I think a very good chance we could reach the 200 down here at 52. Maybe even the possibility of reaching this lower channel line again, which is a stretch. That is a long ways down, but that would mean a lot of good upper pressure for the FAS, giving you anything above 1550 back into, wow, 1920 by the time that trade's done potentially. So watching these areas very closely. We're certainly poised to do something. Hard to tell what at this point. There really is no real direction. The indices look, we'll look at the FAZ daily, and you can see there's no indication here as well. I love it above 60. That'd be a great shot to take that thing long, see if you can run it up for a while. Hope it gets above 60 and sticks. But overall, going back to the indices, guys, this is what we're looking at. Right now, it's just really kind of a bull pullback. So I got to be kind of bullish at this moment till otherwise proven. If we get back above 11.6, I'm definitely more bullish and see if we can't run that thing back up into the upper levels. But there's, things that I can make for a strong bear case as well. So we just have to wait for the breaks. Don't get antsy. Don't let your bias get in the way. You do not control the markets. We do not control the markets. The markets just are what they are. And they're going to break these levels sooner or later, and if you're patient enough, you'll get in on a good trade and you'll be able to sit in for a while and ride it. But until then, we'll just wait for the break. It's the most conservative and best way to do it. Save your money. Capital preservation is so important in this business. All right, guys, be back with you again probably tomorrow, Thursday, probably again with the next video. See you then. Bye.